Hello everyone, Luke here, hope you're doing well. And in today's video, we're going to kind of take a big picture look at some of the macro trends. As you know on this channel, I do tend to look at macro trends. I'm not much of a day trader. This channel, as far as economics is concerned, is mostly concerned with looking at big picture stuff, looking at sort of debt levels in the countries today, looking at big picture with gold and silver. As you know, we're watching the monthly equilibrium pattern with gold, and we're watching a lot of cryptocurrency projects. Okay, so it's important that you realize that Turkey is probably the canary in the coal mine right now. Okay, it started with Venezuela, it spread to Argentina, and now it's also Turkey, and we're seeing major weakness in the currency markets, especially when it comes to not necessarily third world countries, but emerging markets. Okay, now this is a Zero Hedge article. Lira, which is the currency of Turkey, craters after Turkish central bank ends defense reserves slide. Okay, so what the article is basically talking about is how the central bank of Turkey is running out of reserves to prop up their currency. Okay, so how it works is the central bank has a certain amount of reserves, and they can then use those reserves to prop up their currency. Okay, and they've been doing that for a while now, but the central bank of Turkey is having a hard time now artificially propping up the lira using their reserves. Okay, so let's kind of go over this article here. While the Turkish central bank kept its overnight lending rate, weekly repo rate, and liquidity window rate all unchanged at 25%, 24%, 27% respectively, some very critical language was removed from the latest Turkish central bank statement. The central bank's prior pledge to deliver additional tightening if needed, and with that, the government's defense of the lira, which according to Bloomberg, cost the central bank between 10 and 15 billion in just the last few weeks. So you can see the central bank is burning cash, and they're burning through it relatively quickly to basically keep their economy going and to keep the lira higher than it should be. Okay, so this is much worse than expected and supports the view that policy has gone off the rails. You have to realize that the Turkish, and it's not only with the central bank and the currency right now, Turkey and the politics in Turkey right now is kind of in mayhem. Okay, there's a lot of opposition to the current president. The U.S. has sanctions on Turkey, and there's a lot of backlash going back and forth between the U.S. and Turkey right now. Okay. So as Bloomberg notes, central bank head has pledged to wait for a convincing inflation slowdown before cutting rates. This has been stymied by the weaker lira. Okay. Meanwhile, investors have soured on Turkey's currency as the central bank struggled to explain moves in its reserves, fueling concern about the state of the nation's finances. Okay, so one thing you have to realize is that Turkey is very intertwined now with the Western banking system, especially the EU, especially Europe. Okay, and we can see from this chart from Turkey's foreign currency reserves that they are plummeting as they burn through cash. Okay. So, and we can see that the downtrend, if you look at the chart, the lira is in a long-term downtrend right now versus the dollar, okay? And this is a result of their economic policies. It's a result of uncertainty with the politics of that country. It's uncertainty with the economic situation, and that basically unemployment continues to skyrocket in Turkey while they have massive inflation. So let's see if we can look up the lira on TradingView. Okay, here we go. So we'll take a look at just the long term. I know some of you guys don't like the technical analysis, but technical analysis is very valuable just to see long-term trends. Okay, I'm not a day trader, but I have learned that technical analysis is good to see long-term trends, especially on the weekly and monthly sort of charts. Okay, so let's take a look at the US dollar versus the lira, and look at this. So we can see the long term, the US dollar just continues to go up and up against the lira. So what this means is the way this chart works is that a green candle is basically showing you the US dollar going up relative to the Turkish lira. Okay, and we can see that it's a long-term downtrend for the lira and uptrend for the dollar versus the lira. Okay, and we can see this. Look at this: higher highs, higher lows. So this is why technical analysis is good, just to see long-term trends, right? This is no fancy Fibonacci. This is no fancy Elliott waves or ascending triangles, all that stuff. It's just higher highs and higher lows on the weekly. We can see what's happening to the currency. We can see what's happening as the US dollar gains more and more strength against the lira, okay? And so you have to realize that especially Italian banks are very, very intertwined with Turkey, okay? And as this is going to affect Turkish banks, this high inflation, this unemployment rates, the uncertainty in the politics, we're going to see Turkish banks wobble sooner than later, in my opinion. And let's look at this other Zero Hedge article. It's happening in Argentina's too. Argentina's credit and FX markets are crashing for a second day, signaling an implied probability of default, gauge over 60%, as investors rapidly lose faith that President Macri will fend off his populist foes and win re-election this year. So again, it's just more political uncertainty. It's more uncertainty with the cash reserves of the central bank. It's high inflation. I believe that the Argentina peso is down like 25% versus the dollar already this year. And look at this. You can see it just falling apart versus the dollar. Okay. And so they have high taxes, high government expenditure. Argentina's not in a good place either. And so these are the canaries in the coal mine. Okay. And so the current hypothesis is it's starting in Turkey. Okay. So Turkey is very intertwined. Turkey is very intertwined with Italian/EU banks. Okay, so a banking crisis that will start in Turkey will hit Italian banks. Okay. And this kind of goes with Cliff High's prediction as well. I'm a pretty big fan of Cliff High and his WebBot reports, and their long-term trends do tend to be accurate. And if you look at the balance sheets and the derivatives and the exposures of banks, it basically lines up with Cliff High's reports that he said it would start in Turkey and it would hit Italian regional banks. So not only Italy, but specifically Italian regional banks. Okay. And this will then spread through the rest of the EU fairly quickly. This will then spread to the rest of EU. And we've already seen it in the EU. We're already starting to see it. They've already had bail-ins in places like Greece. We can see it with the political uncertainty in France and stuff like that. And it's right around the corner, you guys, in my opinion. Oop, 3 L's. This will then spread to the rest of EU. In my opinion, this will then hit California regional banks. Will be affected most, followed by rest of U.S. banking sector. Okay, so it's all intertwined. So the current hypothesis that I am going with is starting in Turkey. Turkey is very intertwined with Italian EU banks. The banking crisis in Turkey, along with the currency crisis, will hit Italian regional banks due to Italian banks being over-leveraged. Italy is now in a recession. Okay, this will then spread to the rest of the EU banking system as all the banks are intertwined. It will spread to things like Deutsche Bank is very intertwined. You also have problems going on with Brexit. Okay, and then California regional banks will then be affected most in the U.S. From the EU banking crisis, and then they'll then be followed by the rest of the U.S. banking sector, such as Chase, Wells Fargo, etc., etc. Okay, so that is our current market hypothesis. It's pretty concerning what's going on right now in emerging markets, and you have to realize that the banking system, you guys, is so intertwined nowadays that any major banking crisis in Europe will hit the U.S. And we're seeing how intertwined Turkey is with Italian banks. And Italy, they did do some good things politically by electing a more populist movement, but Italy has so much debt, just like the rest of the Western nations. And they're basically going against the EU, and the EU will probably punish them. Okay, and you realize that even though Italy is doing some good things with their policies, it's too little, too late. And Italian banks already have too much exposure to Turkey, and their balance sheets are too heavy. And if you follow Reggie Middleton, who someone I'm also a fan of, you can YouTube search Reggie Middleton. who runs the Veritasium project, and he also on his Twitter and YouTube channel he talks about macro trends because he's a macro analyst. Very, very smart man, I might add. He talks about how Italian banks are way, way over leveraged, and he thinks it will also start with Italian banks. Okay, so that's our current macro sort of economic theory at this time. And as money flees, as there's a banking crisis, money will flee into crypto and precious metals. Okay, so watch Turkey, you guys. Keep an eye on the lira. We can see that on the weekly trend, it's just falling apart against the dollar. As we can see the dollar getting strength more and more versus the lira as they experience more and more hyperinflation. And you know, this is not investment advice, but I don't keep much of my money in the banks, you guys. I keep enough money to pay my rent for a few months and things like that. But most of my wealth is in precious metals and cryptocurrencies because, and this is especially true, I think, if you live in Italy or in Turkey, places like that, your money's not very safe. They're probably going to have bail-ins. It's already legislated in to Europe and places like that where the banks have the legal right. You have to realize that when you deposit money to a bank, it's legally the banks at that time, and they can do bail-ins legally in the current political system. Now, there'll be massive public backlash, of course, and people will probably riot over it and stuff like that. But as far as the current laws go, they're working against you. And the banks are not working in your favor at this time. And you don't have all of the safety that you think you do. And so it's important to keep that in mind and at least have some of your money out of the system. Gold, silver, cryptocurrencies. These are my favorite things. You know, Bitcoin, Litecoin, Bitcoin Cash. You know, it's important to realize that. And there will be a little, if you live in America, I do think there will be a little bit of space, right? So as you can see what's happening in Turkey, we can observe it. And we'll see it hit Italy next, and then we'll see it hit the EU next. And so you'll have some time to get your money out of the banking system, I think, here in America before it hits us bad. But I think, you know, with how intertwined the banking system is, if we see a really bad banking crisis, most likely it will hit us pretty quick. Okay, so there won't be that much time. It'll happen within a couple weeks. So I think basically you'll be able to see the signs if you're paying attention and have a couple weeks to get most of your money out of the banks before it gets bad. Okay? Not investment advice, but that's what I am predicting currently. Okay? I hope you guys enjoyed the video, and I'll talk to you guys later. All right, bye.